And welcome back. There's some very interesting dynamics happening right now in our US housing market. So for example, new listings are down compared to 1 year ago for 42 consecutive weeks. However, there's approximately 40% more houses for sale than this time last year. Yet we're still well below pre-pandemic levels. We have a very unique housing market to say the least. So in today's video, I'm going to touch on what's happening right now regarding housing inventory, home prices, price reductions, and of course, much more, so we can have an idea about where our housing market is headed. And this, by the way, is my weekly video I make for you guys based on data from Realtor.com, based on my own analysis of their data here. So here's their report that was just posted on the 27th of April, which I did not read because I am a nerd. So instead, go to realtor.com/research/data. Click on this link right here. It takes you more or less to this Excel spreadsheet right here. So this is a look at asking prices, inventory levels, new listings, days on the market, as well as price reductions compared to 1 year ago. The percent changes compared to 1 year ago. So the most recent trends we have is for the 4 weeks, not the 4 weeks, the week ended April 22nd this year. Let's first talk about asking prices. Again, this is based on trends nationwide. Every housing market's different. Real estate is local. So what I describe in today's video may not pertain to what you're seeing in your neck of the woods. So for the week ended April 22nd, asking prices increased only by 2.4%. This is actually the smallest increase compared to 1 year ago, going back to May of 2020. And for comparison's sake, asking prices increased by 6.8% during this same week in April in 2019. So asking prices increased by 6.8% back in April 2019, whereas this year they only increased by 2.4%. On top of that, asking prices have only increased by single digits for 19 consecutive weeks. Before that, we saw price gains over 10% for the previous 50 weeks. In other words, asking prices are still increasing compared to 12 months ago, but the levels are much lower than we saw back in 2022, for example. Okay, let's talk about housing inventory, or the number of houses for sale in the US, because last week it increased by approximately 38.7%. What's interesting about this is that we're not seeing these giant increases on a year-over-year basis for inventory levels. So for example, on February 11th, we saw a gain of 68%. We also saw an increase of over 60% from, March 11th all the way through the end of December last year. Whereas this last week, it only increased by 39%. Additionally, the gains of inventory compared to 12 months ago have been more or less on a downward trend ever since mid-February this year. As you guys all know, I like to provide multiple sources of data. So even though Realtor.com is reporting gains of approximately 39% of inventory levels, according to Research.com, they're reporting gains of 52%. Going from 271,000 last year, now it's at 414,000. This means, of course, we have approximately 142,000 more houses for sale right now compared to 1 year ago. There's a few things I want to touch on regarding inventory levels, is that even though we're up by 52%, inventory has been on a downward trend since November last year, despite increases on a year-over-year basis. We did see a very small increase in the number of houses for sale last week, according to Research.com. However, though, the inventory levels have been more or less on a downward trend this year, especially in March and April, which is entirely abnormal. We should be seeing an increase of inventory levels starting in March and April each and every year. What's also interesting about this rise compared to 1 year ago is that even though we have more houses for sale right now, compare the same time frame in 2021 as well as 2022, we're still down by about 52% compared to 2019 at this time. So here's a look at housing inventory according to Altos. Again, right now there's approximately 414,000 houses for sale, but 1 year ago there was 271,000. back in 2021, just under 310,000. And back in May of 2020, or I should say April 2020, there was 745,000. But back in pre-COVID levels, back in 2019, there was 868,000 versus the only 414,000 last week. Now, when I zoom in here, looking at inventory levels this year, as you can see here, inventory levels have been more or less on a downward trend every single month this year. But last week, we did see a small increase going from 405,000 houses for sale. Now it's approximately 414,000. I'll definitely keep you posted regarding this because if this trend continues, let's just say inventory levels start to increase greatly, of course, that would put downward pressure on prices, which frankly is much needed because we need housing to be much more affordable than it is right now. All right, let's get back to my analysis of Realtor.com's data here, because the reason why we have historically low inventory levels is this right here. New listings decreased by 21.2% last week and have been decreasing by double digits in 36 out of the past 39 weeks. On top of that, this is actually the 42nd consecutive week in which we had fewer new listings compared to the same time frame last year. Also, as a note right here, despite this, we have approximately 39% more houses for sale compared to last year, according to data from Realtor.com. However, though, we still have historically low inventory levels going back to pre-COVID levels. Okay, let's talk about how fast or how slow houses are selling right now. Because last week, it took approximately 17 days longer to sell a house compared to the same week 1 year ago. And on top of that, for the past 38 consecutive weeks, houses are taking longer to sell compared to 2022. Again, though, a friendly reminder, this is based on closed home sales. Therefore, this is a lagging indicator of our US housing market. In regards to the number of price reductions in the United States right now, that was an increase of 61.3% last week. However, though, this has been decreasing ever since mid-February this year. In fact, based on my analysis right here, it has been decreasing in 10 out of the last 11 weeks. So big picture here, we have a lot more price reductions this year compared to last year, but the growth rate has actually been decelerating. Also, as a note right here, these smaller increases from a month ago, going from double the numbers from 1 year ago, now it's only a gain of 61%, could be due to two main reasons. Number one, sellers listing their houses more in line with current market conditions. And number two, from decreasing inventory levels, in other words, fewer options for home buyers, and of course, less competition amongst other home sellers. And of course, because we have a lack of houses for sale, historically speaking, this is leading to bidding wars in some marketplaces in the US. So that was the number of price reductions, but let's also have a look at the share of price drops as well. Because according to Altos, for the week ended April 21st, the share was 29%. Back in mid-November last year, the share was 43%. So the share of price drops has been falling since mid-November, which is, by the way, seasonal. However, though, the share of price drops is much higher compared to the past couple of years, but it is on par with pre-COVID levels back in 2019. However, though, the share hasn't moved very much over the past 2 months. It has been paid at about 30%. And here's a look at the share of price drops according to AltusResearch.com. So again, the share right now is approximately 29%, which is much higher compared to last year at 19%, and also in 2021 at 16%. But looking at April of 2020, the share was 25%, very close to the 29% we have right now. Also, when looking at pre-pandemic levels back in April of 2019, the share was also 29%. So the share of price drops right now is much higher compared to the past couple of years, but it's more or less on par with pre-pandemic levels back in April of 2019. All right, I know that was a lot to cover in today's video, so here's a summary for you guys and also provide some insights or some predictions of what may lie ahead as well. So number one, asking prices only increased by 2.4% last week, which was the smallest increase going back to May of 2020. For comparison's sake, asking prices increased 6.8% during that same week in 2019 versus the 2.4% gain we saw last week. Number two, housing inventory increased by 39% year over year last week. However, though, it has been on a downward trend since November last year. Of course, it's more normal to see inventory levels decrease in the winter months, but not for inventory to actually decrease in March and April. Also, as I noted though, there was a small increase in the number of houses for sale last week, according to altusresearch.com. And of course, I'll definitely keep you posted with the latest developments regarding that. Also, new listings have been decreasing by double digits in 36 out of the past 39 weeks. This continued lack of new listings is causing inventory to stay at historically low levels, looking at pre-COVID levels, of course, even though inventory is much higher now compared to the past couple of years. There's approximately 52% fewer houses for sale right now compared to the same week of 2019, for example. And number three, average 30-year rates, according to the Mortgage News Daily, as of today, which is April 27th, is at 6.7%, which coincidentally is actually the same rate I reported 1 week ago. So rates overall haven't moved at all compared to 1 week ago. They are, however, much higher compared to 1 year ago when rates average at 5.3%. And of course, they're much higher compared to 2020 and 2021 when rates were at 3% on average for those years. Number four, the number of price drops from last year has decreased for 10 out of the last 11 weeks. The share of price drops is at least a 4-year high during that same time period though, but it's more or less on par with pre-COVID levels right now. And number five, houses are taking longer to sell compared to the same week 1 year ago for 38 consecutive weeks. Again, though, this is based on a lagging indicator, which of course is based on closed home sales, what I meant to say. Also, the increase of days in the market has plateaued over the past 1 month. So what are some potential changes ahead, given the fact that rates have been at or above 6% for months right now? And of course, a disclaimer, I am not a real estate market fortune teller. Number one, average 30-year rates were about 1.4 percentage points higher right now compared to 1 year ago. This causes a 14% decrease in buyers' purchasing power. Again, this is because rates have increased from 5.3% 1 year ago. Now they're approximately 6.7% for people with exceptional credit, of course. Number two, housing affordability is still an issue, especially compared to the past couple of years. Also, over the past couple of weeks, it's getting worse. Buyers looking to purchase a $450,000 home, putting 5% down today compared to early April, would pay approximately $140 more per month to buy that same house just 2 or 3 weeks ago. This, of course, is due to average rates increasing from 6.16% to 6.7% from April 5th to April 27th this year. Additionally, at a national level, home prices have been increasing since February, rising by about 7% over the past 2 months, based on data from Redfin. Number three, early signs of home buying demand have been absolutely all over the place due to the fact that rates increase 1 week and they actually decrease the following week, which is making it very challenging. The most recent stats we have showing applications for home loans, according to the MBA, actually increased by 5% compared to the previous week. Again, that's based on data from the MBA, which was just published on April 26th this year. However, though, when looking at pre-COVID levels, their purchase index is on par with the lowest levels going back to October of 2015. In other words, demand is still very, very low. Also, Redfin reported on 4/20 that pending home sales fell by 19% from a year ago, but new listings also fell greatly as well, down by 21%. This means low demand meets low supply, which is causing bidding wars in some markets. The National Association of Realtors, or NAR, also reported on 4/27 that pending home sales fell in March as well. down 5% month over month, and also down by 23% compared to March of 2022. It appears this market is highly rate dependent, so the data coming in is ever changing. Number 4, sellers and buyers have exited the market, leading to a dip of new listings as well as contracts being signed as well, especially compared to past a couple of years. The lack of new supply since last summer has led to inventory remaining at historically low levels. Again, down by about 52% compared to April of 2019. If homeowners continue to decide that now is not a good time to sell a house, that will limit inventory and put upward pressure on prices further. Again, if that happens though, or if this continues to happen, it's not going to look like the first half of 2022 by any means. And number 5, I appreciate you. Thank you so much for watching today's video, and I'll see you on the next one.